This is Alan Bush with the Daily Financial Forecast for Tuesday, February 20th. Starting out with the stock index futures, last week saw the S&P putting in its best weekly performance in about 5 years. However, some pressure developing today with some earnings on the retail side coming in a bit on the weak side. Also, we do have quite a bit of supply from the Treasury, so there is a concern that interest rates could move higher this week, and that a bit of a negative influence, at least in the short run. However, I do think there's a very good chance that even though we are lower today, that we can see a recovery and higher prices later today in the indices. Longer term, I also believe that we are not in the early stages of any type of long-term bear market. So breaks, I believe, should be used as buying opportunities for all of the major stock index futures. Moving over to the currencies, the dollar index, after last week trading at a 3-year low, some recovery today. However, interest rate differentials still remain on the bearish side for the greenback, even though the Fed is likely to raise rates possibly 3 times this year. Other central banks are a bit more aggressive and a bit more hawkish in either withdrawing accommodation or raising interest rates. So that is a recipe for a weaker dollar. Euro currency trading a little bit weaker. However, there is a double top pattern that I believe will be ultimately taken out to the upside within the next couple of weeks. Interest rate markets, a lot of supply, as I mentioned earlier, $258 billion in Treasury offerings this week. So that should push up interest rates and push futures lower. Also, we do have a double bottom in the 30-year bond futures in the March contract. And I think that low will be taken out as the main trend still appears to be lower for the interest rate futures complex, especially bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.